See, what is open interest? At any given point of time in the market. So obviously there is one buyer, there is one seller. But whenever one contract is going to introduce in the market, it will always count as a contract until unless someone is not going to transfer from one place to another place. Okay. So at any given point of time in overall market, overall open contracts, whether it is buyer or seller, unsettled contract is called as open interest. And why OI is important? Because every day your volume is going to be flush. Probably you will start, say, let's say you have started trading at 9:15. So at 9:15, your any stock, so let's say Nifty underline. So Nifty 14,900 underline as a options. Whenever one trade is going to happen, it's count as a volume for a day. And it keep increasing for a day, volumes, right? And obviously your open interest can also increase and decrease. But end of the day, your volume becomes 0 because next day your volume will start again from 1, right? But OI will not be a 0. OI will be 0 only when all the contract will settle down. That's why OI on a longer run will tell you where the market is going on and what. So overall, so just try to understand one very important part. Whichever player in that market or whichever the prices you are looking on the screen, these are not the prices. These are the actual people. That is one of the biggest blunder most of the traders do, right? Whatever price currently you are looking on the screen, this is not the price. This is a person who is going to trade. And there is one perspective. If you are going to buy, there is one person who is going to sell. So he has some different perspective always, right? So obviously you're against. That's why he have a different perspective. So whenever you are going to buy or sell, please come to know that what is open interest at that point of time, which will give you the perspective of overall market scenarios. Okay. Now that's what OI and volume is important. Now high OI indicates, so whenever open interest is going to increase, right, it will tell you the volatility is going to increase. It can be down and up, both way, right? But certainly it increases the volatility for sure. One very important part, OI is going to give you the resistance and the support. See, as an overall market, whenever open interest of any strike price, whenever open interest of any strike price will going to be increased, the meaning of that, there are big seller is going to shorten. There are too much of big seller is available over there. So they are a big player. They have a huge amount of money. So they probably can control a market barriers, probably control those prices, right? So they don't want to cross those prices. So as you know, Gogoi and Shankar both have explained the same concept, right? 66% time seller is making money, right? But why? So the first reason, obviously, to sell the options, you need more margin. Obviously, you need more money, right? But your profit is slightly minimum, but the probability is high. And because they have a huge money, they can play with those prices, right? So whenever any call options, OI is going to be increased, the meaning of that, market will not cross that call out. Market will not cross that call strike price. It's a huge resistance over there. Similarly for a put, whenever any open interest of any put strike price is increased, the meaning of that, market is not going to break that. It's a huge support. Definitely market can break. It's not about market can't break, but it will certainly take time. It will not as simple as other prices movement, right? Okay. Now this is what a price movement, or this is what the OI graphical representation of the today market. So obviously you just see the market. Okay. So what happened is that, so 15,000, there is huge. So green is a call option OI and red is a put option OI. So on the 15,000 call, there is a huge OI buildup. Okay. And I don't need any rocket science. By looking this number of 15,000 call options, I can certainly say that market will not cross 15,000 at any cost. Market will not cross. It is not simple, right? And that's the way whenever market for today, whenever market crossed 15,000, whenever market crossed 15,000 strike price, I will immediately buy a put option of a 15,000 because I know market will come down. Because above than market 15,000, there are these numbers are in lakhs. There are lakhs of open interest, which is open. So basically open contracts on this 15,000 strike price. So as a client or as a user, I know that this 15,000 call option will not cross. Okay. Similarly, on a put side, market build-up. So 14,500 is definitely not able to cross. Now on a 15,600, there is a huge open interest increasing on a put side. 14,700 is also increasing and 14,800 is also increasing. So the meaning of that, market will be range in between 14,800 and 15,000. So in that case, today, if somehow market is going to move 300, 400 point below or up, so certainly you can take a buy options, either call or put, based on these numbers. Okay. So on a lower side, because it's a lower risk today expiry, so premium is very low. So you can definitely play with the lower amount of options, lower price of options, cheaper options, and you can definitely make money. Now, for a longer run, if you know that market, there is a huge resistance and support here. So you will also understand what you should not do. See, please try to understand. Alone open interest is, so there is no meaning of, if you are evaluating open interest data alone, right? There are other data need to be, look into consideration, right? But the meaning of that, whenever you will see that open interest data, at least you should understand what I should not do. So in that case, if someone is going to buy an option of 1,500, call option of 15,000 or call option of 15,100, he will certainly in a loss. So you should avoid that at least. If you are not buying a put option when market is crossing 15,000, it's fine, but at least you should not buy call option at all. So OI data will tell you what you should not do. Okay, that is one of the perspective. And obviously, it will tell you exact data what you want to do, and that is one of the best data if you want to identify which strike price I should trade for the day.